Okay, so today we're going to talk about Meta, and Meta have fallen about 15%. So let's get straight into the video. So Meta reported earnings last week. I thought they were blowout earnings. We might as well get to it right. Why the stock is down. On the conference call, Zuckerberg said that the research and development or costs may go up to about 40 billion for AI. They're going to spend a lot more money on AI, and we're going to have a slide that's going to show their capital expenditures, coming up in the next year, what they did last year. And like I said, remember they estimated about 40 billion. We've been shareholders in Meta now for a little over 2 years. Last week we added a little bit to our position because of the steep drop. We bought it back in 2022. We started buying it around 250. We stopped buying it around 90. We thought it was a really good investment opportunity. And even now, as it falls here, as we see more what the company is doing, we think it's undervalued here at about 430. And we're going to show you all this. And then we're going to start with their earning presentation. This comes from Meta's investor relations website. And after they report earnings, this is one of the things that we like to look at. This slide shows what their revenue is for geographical area around the world. Total revenue was 35 million. But what we really like about this one is you can see from the first quarter of 2023, they had revenue of 28 billion, which that means their revenue, they're on an accelerated, their revenue is accelerating to the upside. As they get into the later 2020 comparisons to 2023, later in the year, third and fourth quarter, they're not going to beat, by this much. But as they did compared to the first quarter of 2023, but Meta is having revenue growth, and a lot of that we believe is from AI as you go on onto their page. And one of the things that we wanted to mention that we noticed when we was on Meta today is that in their search, how you go to their search box and you may look for an old friend or something like that, and you just search their name. Now it says ask Meta AI anything. And so we went and we asked them, how do you purchase stocks? And they gave us a real good analysis breakdown. So basically they didn't put a chat box right into their search in Meta, which is something, that we like and what they're spending that money on to do things like that. This also pretty much shows the same thing. This shows what they're from advertising, as we know with Meta, majority of their revenue comes from advertising. That Reality Labs did increase revenue to 440 million, up from 339 million. But we know Reality Labs is losing a lot of money. We was in an eyeglass shop about 2 weeks ago. We tried on the Meta Ray-Bans and we liked them. We got to play around with them for a little bit. And we think that's going to be a big opportunity for Meta going into the future. So we look at their expenses. Remember, their revenue is up significantly, so these percentages are show a little bit different. So as you can see, from the first quarter of 2023, the cost of revenue is down to 18% from 21%. So that tells you that it's probably still the same, but since revenue increased so much, it brings down the percentage. If you've seen this revenue increasing by a lot, and you see the revenue increasing by a lot, but these are, let's say, their general and administrative is increasing, the percentage is increasing more, then that might be a area of concern. This just shows their total income of 14 billion. I mean, a little over 14 billion, and with their taxes. And what I like about this one is you can see what they did in the first quarter of 2023 of 7 billion, and an increase almost a 100% increase in revenue. And as I said, you're probably not going to see that in the future as quarter to quarter comparisons. So this shows their total, income. This shows their per share income, which would be used to calculate their earnings per share of 471 all the way up from 220. That's showing their earnings more than doubling. Even though it didn't double on their by dollar amount, it did over double in their per share. And more than likely what that's from is that Meta is buying back a lot of stock. So that's probably why you see an increase like that. And this showing, as we said, we talked about capital expenditures. You can see in 2022, that's when I purchased it, when the stock was long, and and Zuckerberg came out with the year of efficiency. They stopped spending so much money, but now he's talking about 40 billion. You know, if they was down from 32 billion, and then last year it went down to 28 billion. Now he's talking about an increase of 40 billion. But I like that they're investing in the future. I mean, we may not see, as he said on the earnings call, you may not see it tomorrow. You may not see it. You might not even see it next year. But you're more than likely going to see the work that they're putting in today in the AI. You're going to see that in the future. And so, if I had to guess, you're going to see more earnings per share, more revenue growth from a whole new arena. And when you do go and try to use that search box, they almost got a Google within. They wasn't big on search before. Now they're going to be big on search. I'm really impressed with this. 3.2 billion people around the world is logging into to some of their apps, Instagram, Facebook. So that's pretty impressive. This part right here is also impressive. You can see in the first quarter of 2023, they had revenue per user. Revenue per user. I've never gave Meta any money. I mean, so just basically based on the advertising that they show me, they're earning $11.20 off of me in this past quarter without really having you subscribe to anything or anything like that. I found that to be pretty impressive. So that's pretty much what we use from that information. And then also what we look at on a daily, because that was their earnings call. What we look at on a daily, the site that we use CNBC. And as I said, the stock is at 431. We did purchase some last week at around 432. So we're going to watch it and see if it keeps going down. As you can see here on April 5th, it had closed at 427 as of a high of 530. So yeah, Meta is almost down 100 points. What I thought was a blowout quarter, but just because they said that they're going to be spending more money here in the future on AI caused the stock that much to plunge. And we as investors, long-term investors, we buy companies for the long term, and to make investments today to benefit for us for tomorrow is something we like. And so you can take advantage of this opportunity and buy Meta. And if I really had to guess from going through this, I went through this 2 years ago, and it was mainly because of Apple. Apple had changed their code, so Meta wasn't allowed to track people as much as they wanted to, as they was able to in the past. And so when they was picking advertising to send to you, they had to change up. And they had to change up, and AI is one of the main ways that you use. I'm sure when you log into Facebook, or you log into log into Instagram, you see a lot more recommended pages, and just not from your friends. A lot of that is AI. And I also use this right here to see the dividend, what their dividend is, their percentage. I like to use this for their PE, and then their forward PE, which is the 21 the 32 is not correct. It's going to be around 21 is their forward PE. I also like to use this right here. This shows their projected earnings. So, in most cases, they normally beat this. Lately, that's what they've been doing. But this just shows what they're going to earn in 2024, and it shows what they're going to earn in 2025. And you can kind of calculate what's going to be their earning growth. And like I said, most times they beat it. Something serious can happen. So even going from 471 to 511 is a nice earnings jump. And if they might earn 520, something like that. Unless we have some type of recession, people stop advertising. But then also, if you click on more, you can go back and you can look at what their earnings were for 2023. So that's also what we use. Now what we're going to go on to their income statement and balance sheet. We like to use this just to compare their cost. As you can see, we talked about their revenue already, and we talked about their expenses, but this breaks it down a little bit more. The cost of revenue, which is basically what charges, what do they pay for to get their sales? Then research and development, and then marketing and then sales, and in general. So they spent $3 billion basically on general and administrative costs. Now this gives you the breakdown. It even comes down to the diluted $4.71. So that's basically how you read a income statement. And the best thing to do is you can compare it to last year. And then it's also important to understand their balance sheet. You don't have to understand, all this in a lot of detail. I wouldn't say it's not self-explanatory. You have to um, read some type of book like Security Analysis, written by Benjamin Graham, will help break you down balance sheets and income statements. Or if you're in college or getting ready to go to college, I would strongly recommend taking some type of accounting courses, which can really help you to understand this. So cash and cash equivalents are 32 billion. Marketable securities, and more than likely that's 1 year or under. Probably some type of bonds, some T-bills, stuff like that they're earning income on. And so that'll tell you that they got about $57 billion in cash. That's down slightly from last year. And like I said, that's because they're buying back a lot of stock. And then you got your marketable securities, which is probably some type of equities that they may hold in different companies. That's more of a long-term investment, longer than a year. So that's the part of the balance sheet that I really pay attention to. But you can have the leases and goodwill. I don't pay that much attention to that, but those are some of the things in the asset part of it. In the liability part of it, what I like to really pay attention to, knowing that they don't have financial problems. The short term amount of debt that they have, is not a problem. Their total long term debt is $18 billion. So that tells you, I just said they have $57 billion, so they can pay that off easily if they wanted to. If I had to guess, they're probably borrowing money to buy back shares. So that looking at that to tell you that Meta is a financially sound company, and so that, it makes a great investment. You can buy it at around a forward PE of 21. They're well financed. They're growing revenue. Their revenue is on an upswing. And Meta, I see them being around for a very long time, which makes this a good investment. I normally don't like to buy companies. I like to buy companies when the overall market turns down, because if the overall market turns down, Meta are more than likely to turn down with them. But I thought this was a good opportunity to pick up a couple Meta shares. Okay, the last thing that we're going to go over is the report that I use to, once I follow them on CNBC, which is I use as my market watch. And then if I want to get more information, to get in a quick snapshot before I go on and start actually investing in the company, or start reading their annual reports. I read their annual report first, their quarterly report. But this is what I use. So this is the S&P report. They changed the name. It used to be called the S&P report, but now it's the CFRA report. You can find this, on Charles Schwab. You can see that they're recommending a buy, even though I don't use that. I've come up with my own buy rating, and they have a target price of $540. So you do use this as the trailing PE, and then the trailing PE now, they have it at 17. And then what the PE right now is 25. Like I said, the overall stock market forward PE, I believe, is 18. And so this is a pretty cheap stock. And I use this. You can get a quick snapshot. Like I said, this is just a quick snapshot to tell me if I want to dig a little bit deeper. So now you have what their estimated revenue is, what the 2024 revenue, and then estimated revenue, and then you can see their past revenue. You can see what the estimated earnings are, and then you can see some of the highlights in the company, and then they'll give you the investment rationale and risk. If there's some bad information, they'll have it out there and there. If there's some good information, they'll also put it in there. You can also utilize this for their dividend. And this gives you the business summary. So if you're looking at a new company that you're not completely familiar with, that that you're just started looking into, this will give you a nice little snapshot of the actual business. And then this also right here provides you some good data that you can use, price to sales. We don't really go with this a whole lot, but we do use this right here so we can get a past snapshot. We used to be really big on book value, but with companies like Meta, book value is not going to help you hardly at all, because most of their book value is going to be cash, and then buildings. They're not a capital intensive business, so they're not going to have a book value that's worthwhile looking at. But it'll show you their free cash flow. Also, it'll show you the revenue, so you can see how over the years the revenue of the business has grew. You can see their operating income. It's crazy to me. Crazy when I look at Google, I look at Meta, I look at Microsoft. These companies are making tons and tons and tons of money. It's incredible to me. And then it shows their total income, net income of 39 billion. And this is also, if you hadn't went and looked at their quarterly reports, stuff like that, this will give you a good insight. Remember, on their quarterly report, they'll only show you last year, but this will give you what they had over the years. So, I mean, all the way back to 2014, you can see that they had cash of 11 billion and they steadily grew that cash. You can see, and this will show you that they just now started taking on debt. And so all this could be helpful, as a snapshot. As I said, what's most important, we're long-term investors. We've seen this as an opportunity to pick up some shares of Meta. We're really positive on Meta, and we think that Meta has a bright future. I hope this really assisted you. I hope if you use these examples, I hope it gave you an opportunity of how you can dig into a company and see how they're doing on a quarterly basis, and that to help you come up with your idea, looking at the quantitative factors, and then and the qualitative factors is kind of what we like most about Meta. I mean, Meta is a company that I think people use every day. They use Instagram, they use Facebook. Messenger is getting more and more popular. So if you combine quantitative factors and qualitative factors, that's how you come up with the investment. I hope this information was helpful to you. And if you did find it to be helpful, please please subscribe, and sign up for notifications when we come out with our new videos.